the Globezilla Studios in New York City, welcome to the Biz Show. I'm Mylan Studart.
And I'm Anaidi Solar.
And the Biz Show is bringing you all the news your pockets want to know. Last week we talked about the importance of getting your first credit card. In today's episode, we are learning about credit scores. A credit score is a 3-digit number created from information in your credit report. It tells lenders how risky a borrower you are, like if you pay your bills or if you're delinquent on your credit obligations. The higher the score, the better for you. So here's the first thing to learn. To understand and improve your credit score, you have to become familiar with your credit report. A credit report is a detailed look at a person's credit history. Credit reporting companies like banks and retailers collect personal information about you and your bill paying history. Then credit bureaus like Equifax, Experian, and TransUnion collect that information from all the companies you have a credit account with and create a report based on that information. Lenders use these reports to determine a loan applicant's credit worthiness. In our last episode, we mentioned the importance of applying for your first credit card to start building a credit history. Credit cards and credit scores go hand in hand, and we'll get to that shortly. Anaidi, tell us what you know.
On this segment of the Biz Show, we will discuss 3 things. 1, why and how to get your credit report. 2, how to improve your credit score. And 3, who's winning at credit use. First up, why get your credit report? Main reason, identity theft. Everyone with a social security number has a credit report, even children. A clean credit report is a shiny target for identity thieves. Identity thieves try to steal social security numbers, then scour the internet and social media for all sorts of personal identification. So be careful with how much private information you share on social media. Also, try not to have the same easy password, the ones that include your birthday. Don't have that same password for every one of your accounts. Switch it up. Another important reason to get your report is it includes the 5 categories that impact your score. You can see which categories are hurting your score and work to fix it as soon as possible. It can take a really long time to adjust it, but it's easy to do. This is why keeping track of your credit score and report is so important. Protect your identity and build a solid credit score.
Now, how to get your credit report. You're entitled to 1 free copy of your full report every year from each of the 3 nationwide credit reporting agencies. You can easily order it online from annualcreditreport.com, the only authorized website for free credit reports. You will need to provide your name, address, social security number, and a date of birth to verify your identity. So make sure to use a secure browser by checking the padlock next to the address bar and by using a secured Wi-Fi network.
Once you have access to your full report, you'll be able to see your entire financial history. Print it and save it. Don't lose it. These official reports are free only once a year.
Now that you have your credit report, these are the 5 categories that we can change to improve our scores. 1, your payment history. 2, your credit utilization ratio. Average age of your credit lines. The types of credit mix. And last, the number of credit inquiries. On the next segment of the Biz Show, we will show you how to improve your credit score by adjusting each of these points. Stay tuned. Welcome back to the Biz Show. On this episode, we're talking credit scores. Now that you know how important it is to become familiar with your credit report and score, let's explore ways of raising it. Credit bureaus calculate your score into a formula that adds up to 100%. First, your payment history is 35% of your total credit score. Here they look to see if you pay your bills on time, if you're behind, or even delinquent on payments. Your first credit card will raise your credit score in this category if you make payments on time. The longer you're current on bills here, the higher your score and the less risk you pose to lenders. But if your accounts go into collection, and even after you do find the money to pay for it, the delinquency still shows up on your credit report for 7 years. Don't let that hurt your future and only borrow what you can afford to pay back.
Second, your credit utilization ratio is 30% of your total credit score. This number is calculated by dividing the balance you owe by your credit limit. For example, let's say you have a card with a credit limit of $1,000. If you owe a $200 balance, this means your credit utilization is 20%. A pretty good ratio, but anything higher than 30% is sure to raise a red flag. Keeping your credit utilization under 20% will help raise your score, especially if you're paying your balance off in full every month. If you want to increase your credit score, you should use your credit card instead of your debit card to pay for usual expenses. Debit cards don't build credit because they withdraw money directly from your bank account. At the end of the month, if you don't want to pay interest, just pay the balance in full by making a transfer from your bank account. Doing this will raise your credit. Credit utilization is calculated as 30% of your total credit score, so make sure to keep your balances low.
The age of your credit history, or the age of your credit lines, is calculated at 15% of your total score. This is why the Biz Show advises you to start building credit now while still in college. The longer your accounts are open, the better your score.
Another 10% of your credit score is your credit mix. That's how many different types of credit you have. It tells lenders you have experience with both revolving and installment accounts, like a credit card and a car loan, for example. It's not a good idea to open an account you won't use just to have it in the mix. This transition to having different types of accounts will happen naturally as we go into different life stages, so there isn't much you can do here to raise your score. But keep it in mind.
And finally, credit inquiries. A hard credit inquiry shows up on your credit report whenever you apply for credit with any lender, be it for a credit card or student loan or a car loan, etc. That can lower your score. Now, a soft credit inquiry won't impact your score. These inquiries come from insurance companies when you're buying car insurance, from a company's employee background check on you, and from other companies that will show you your credit report too. If you apply for a credit card with different companies in too short a time, it will definitely lower your score. So to avoid this hard inquiry, research credit card approval rates for your credit score number now that you know what your number is. By seeing the odds of getting approved for credit, you can avoid applying to lenders who might decline your business. Websites like NerdWallet and creditcards.com have tools for that. And remember, a new account on your report means a lower average age of existing credit history. So only apply for credit when you really need it. Here, write this down. These are the websites that you can go to see your credit score and report through a soft inquiry for free. There you can monitor your credit score for changes to avoid identity theft and find more ways to raise your credit score. CreditKarma.com, CreditSesame.com, NerdWallet, and Credit.com.
Now stay with the Biz Show. Next, we will show you who's winning at Adulting, Credit Score Edition. Be sure to send us your questions via Twitter, adding #Globesville and the Biz Show. See you soon.
Welcome back to the Biz Show, Credit Score Edition. Now, in our last segment of the Biz Show, Manaidi is bringing you an incredible story of a person who raised the roof on his credit score.
Hey everyone, this is the story of Matt Giovannici. When Matt got his first credit card at age 18, he pretty much used it as if it were a $500 gift card. He bought unnecessary things, quickly maxed out his card, and waited 6 whole months to make his first minimum payment. Obviously not the best financial decisions. When he checked his credit report a few years later, he scored a low 590 out of 850. Matt's carelessness continued until he was 27 and racked up about $10,000 in debt. At this point, he had an epiphany. Thank goodness. it was time to start adulting. He was motivated to undo years of bad habits because of his strong desire to achieve his professional goals. Matt wanted to be his own boss and start a business, and I'm sure many of us college students can relate. Matt realized that he truly wanted to achieve his goals. If he wanted to achieve his goals, he cannot be bad with money. He had to learn how to properly manage his personal finances and transform his credit score. Here's how he did it. He read self-help books on personal finance and how to become rich. He also asked his mom for help. There's no shame in that. And she put him on a strict budget. Matt was so determined, he simplified his lifestyle and managed to reduce his monthly expenses from $4,500 to $1,500. He then took on freelance work, increasing his income. Then he started making his payments on time and reducing his debt. After significant progress, Matt asked his credit card companies for higher credit limits, which lowered his credit utilization ratio, a category we covered in the last segment. Less debt and more available credit lowers your ratio, which boosts your score. A few years after his moment of enlightenment, Matt buckled down and was able to increase his score over 200 points. He now boasts a fantastic score of 801. He can qualify for pretty much anything, including resources to help grow his business and premium credit cards with awesome rewards. But according to Matt, the best part of all of this is that his credit score impresses his mom.
Wow, what a story from rags to riches. And you can do it too. We hope you enjoyed learning about credit scores on this episode of The Biz Show. Next episode will give you tips on how to best manage your student loans and even defer making payments.
Now be sure to send us any financial questions and we'll do our best to answer them. Tweet Globesville and add #TheBizShow.
And remember, if you like what you see and especially what you hear, share us on Twitter, Facebook, and Instagram adding #Globesville and The Biz Show. Here's to you millennials becoming business savvy in 2017. I'm Mylan Studart.
And I'm Naidi Solar. See you next week.